Hey guys, welcome to the Independent Investor Channel. My name is Ryan. This is one of my favorite excerpts explaining fees, expertise, and the so-called advice that you're going to get amongst the financial planning community.
Please tell us what your charges are. That's all I ask.
So a lot of what we try to do here on the Independent Investor Channel is to avoid regret. You know, when you get up into your 50s, 60s, and 70s, you know, and you're looking at focusing in on retiring, really the last thing that you want to do is look back over your life and regret the decisions that you've made.
Talk to your advisor about fees and they give you a song and dance or they're not open and honest about it, that should be a red flag.
It from 1% to, I would say, below 2% out there. Okay. We're not the highest fee people out there. Mm-hmm. We're above Bank Montreal, below RBC.
This type of wishy-washy talk within the industry really has got to stop. If you insist on going with a financial planner, make sure that they straight talk you, okay? Estimating fees between 1% and 3% and making you feel like it's not a big deal is actually the difference between hundreds of thousands of dollars over the course of an investor's life.
It's free. It's almost like a free ride.
It's free.
Okay, so the words free ride actually came out of this planner's mouth. Let me rephrase, and I'll go ahead and give you the Independent Investor Channel's summary of what he actually meant by saying it's a free ride. It's going to cost you hundreds of thousands of dollars over the course of that investing life. That's what he meant to say. So just for clarity for my viewing audience, I'd just like to clarify that one point.
This actually makes sense.
Now, on the next page, you'll see a breakdown of costs.
What? It's just we were...
We were going to ask about it, but we weren't sure when, so thanks.
Yeah, that's great.
Unfortunately, this is really where a lot of the deception occurs, right at that initial meeting, where somebody who doesn't know a lot about investing is going to accept a fee based on a really quick explanation, and the full impact of those fees really cannot be felt until, you know, decades have gone by over the course of an investor's life.
That's great.
But check it out. If Melissa puts her $50,000 into mutual funds and they grow 6% a year, after 25 years she'll have $214,000. Not bad. But she'll pay a management fee, about 2% on her entire nest egg every single year. So, by the time she's ready to retire, those fees will have gobbled up $100,000. And that money, it'll get divvied up among the companies and advisors.
If we receive a trade commission prorated monthly based on our average monthly assets.
Turns out the financial industry doesn't have to tell you how much investing can cost you in dollars and cents. And when she heads to RBC to ask about fees,
is it just on what we're making, or is that of our full amount that's in there?
Melissa's quest for a straight answer fizzles again.
That fee is it's on the percentage of returns of the fund. Okay. So it's like, sorry, I just want to make sure I'm thinking about this properly. Like, it's not on.
So here's an example of some really poor information between these two financial planners. They're basically saying that the 2% fee or the management fee is only charged on earnings within that account. That is completely 100% false. The management fee is always assessed on the total amount of assets under management in an up market or a down market. It does not matter.
This advisor's talking about mutual funds. Eventually, he admits there's a fee.
So they're charging 2%.
Okay, but get this. He says Melissa will only pay it on the amount that her investment makes.
On the growth of the 50,000.
Okay.
So if your 50,000 grew by 1,000.
So it'd be 2% on the 1,000?
Yeah, 2% on the 1,000.
It would only be on then what that 50,000
has
made.
done. Correct.
Okay.
Correct. Yeah. Kind of neat, eh?
Yeah.
It's complicated, but it's neat.
So I heard something that was really, really appalling. This financial planner says that it's really complicated, but it's neat, eh? This is a lot of why I came out with this channel, in that I don't feel like investment dollars is a laughing matter. I don't feel like it's a joke. And I also don't think it's really that complicated to understand.
But it's neat.
So, who is giving us advice? The people Melissa visits have a range of credentials, but the bare minimum to get licensed as a financial advisor? Just an online course and a multiple choice exam. You need 60% to pass.
You are going to be in debt for the rest of your life. It's nothing to be afraid of. It's just the reality of living in these times.
After a year, you should be able to get an extra 10,000 at least.
That's ridiculous.
It's free. It's almost like a free ride.
Complete and utter BS.
If you do it right, you can get, say, 5,000 within just a few months, a couple months, yeah.
Yet
10,000 after a year, or 15,000, or maybe 20,000 after a year.
Yeah, that's one of the worst pieces of advice I've ever heard in my life.
So your debt.
Yeah.
Yeah, and how is that Australia, Jimmy?
Most financial advisors in Canada don't make money recommending that you pay down debt. Whereas if you invest money, then clearly there's money to be earned involved in that transaction.
So even if paying off a debt might be in the client's best interest, they might not recommend that?
Right, and I think this is a big conflict of interest that people need to be aware of.
First Preet says you should know advisors are selling products.
I mean, every financial advisor to some degree is going to wear a sales hat. It's just some are a little bit more salesy than others.
So this is the only small excerpt that refers to debt, and I found this piece really, really interesting. And you don't really need me or anybody else to tell you that paying off debt is actually always in a person's best interest. When they start looking to invest. It doesn't do you any good to pay a negative interest rate on a piece of debt while you're trying to achieve an average rate of return in the stock market. It will end up being a wash and it will consume you over time.
Bank stocks, oil stocks.
Index-linked GICs. RESTs for Cali, right?
So if we buy, they make money for themselves or their companies.
Tax-free savings account with an RRSP.
Mutual fund stocks, bonds, GICs.
Canadian equity fund, etc.
And blah, 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 blah. What they're trying to say there is that they're going to invest you in the same stocks, index funds, ETFs, or bonds.
We're not here to sell product, you know?
Right.
It's not like, oh, this one is fantastic, look at them, Miss Lisa.
But they sure suggest hefty profits based on how they say markets fared in the past.
Every segment of 10 to 20 years,
Yes.
there is usually called a historical rate of return of 10 to 12%.
And mention that high return over and over.
Spin probably will make about 10 to 12%. You get 10, 20%, so it will make a little bit more than 10 to 12.
Yeah.
Yeah, potential.
Okay, so I just happen to know that this behavior goes on all the time, and although I can't do anything about it, I mean, you put me in front of some individuals like this and we're probably going to end up out back. But this is, again, is a lot of the root of why I came out with the Independent Investor channel, because it allows us to have a voice and it allows me to defend the potential people who are looking to enter into the investment arena and protect those people from crooks like this. So the purpose of this video is to shed light on a lot of things that go on within the industry, and you think, okay, well, these are really rare anomalies. Guys, this happens a lot more common than you'd think, okay? I've had them happen to me. I've had them happen to family members, so it's affected me, and I've spoken to many, many people who are now dealing with financial planners, and they're having their eyes open to the effect of fees or the charging of fees that they really didn't understand when they initially went in and set up their investment accounts, guys. So I hope this has kind of shed some light on the industry for you guys, and it helps you guys make a more informed decision going forward for your investment careers. Guys, thank you so much for tuning in to the Independent Investor channel. Subscribe to the channel if you have not done so. You'll be notified of future videos I put on YouTube. Share this link with anybody out there that you know that can benefit from the information, and certainly leave your comments at the bottom as I read through those and respond in detail to every one of my viewers. Guys, thank you so much for tuning in, and good luck in your investment future.